All right, we've got a returning guest and in Dan Foch and his buddy Nick. They are from the Canadian Real Estate Investors Podcast. They just launched. They're the, I guess, the #1 Canadian business podcast right now. So doing good stuff, and we always have a good discussion, Dan and I, and happy to have these guys on. So if you enjoy the podcast, give me a rating, 5 stars, and tell your friends. Enjoy. Thanks for coming back.
Pleasure.
Yeah, you brought your buddy Nick.
Yeah, my buddy Nick.
Yeah.
I had to. We're like we're a package deal now.
Yeah, good. How did you guys meet?
He slid into my DMs actually.
Oh yeah.
Yeah, it's the way I get most of my my dates, my relations, the way I met my girlfriend. It's the way I met Dan.
Yeah.
But yeah, no. On a serious note, just a few years ago, he had posted a deal in Uxbridge where my parents live. I was very familiar with the area of town, the property, so reached out to him, and a week later we were at the property, went and grabbed wings and beer, and then tried to, spent a year I think tried to put a deal together on that property.
Yeah.
Never ended up going through, and then just about a month and a half ago, that same property was destroyed by a tornado.
Oh I was racing that weekend.
Yeah, okay.
It was insane.
It was, so I was in Uxbridge that weekend,
Yeah.
kind of babysitting my parents' house as they were gone at the cottage, and I had to give them the unfortunate phone call. Hey, there's 40 square feet of roof missing, and
So this was your place.
my parents' place.
Yeah.
Yeah.
But
Oh geez.
Yeah, no, the other place, the place that we were thinking about, well, like I had it listed for sale, and then Nick and I were basically trying to fundraise on it for a while, and I had it pretty close. It was a good deal. Like it was like a 4-plex with awesome upzoning potential. I think a half acre.
Three
in,
quarters
three-quarters of an acre and like downtown development potential. It was a nice site. Anyway, it got smoked by the tornado. Like complete. Like the company, the insurance company, still emailing me saying, "Can we get pictures of the videos to like triage or like figure out how much the loss was valued at?" Yeah, so this industry is so weird sometimes, right?
Oh yeah. Yeah, the insurance industry. All the pictures. Send me pictures from the past.
Well, because we had 3D tours and stuff too,
Okay.
right? So it's kind of funny.
So you guys just did a deal to do a new podcast.
Yeah.
That's exciting. Tell me about that. Like you're piggybacking on the Canadian real estate or Canadian investor.
Yeah. So those guys are basically like top 5 shows in Canada, I think, and then consistently pretty well #1 in in the big Canadian business, right?
yeah.
On Apple Podcasts. I guess we kind of piggybacked. Like they'd had a lot of requests from their audience to get a little bit more elaborate. They've really nailed down the system, right? On the advertising side, on the content generation side, like just the cadence that they use. It's like one piece of evergreen content, one piece of timely content,
Right.
Twice a week. They're not convoluting with the ads. So they had reached out to us just like as an exploratory, and they were like, but you probably need a co-host. And I was like, well, this guy and Nick and I had already started making content together, and so I'm kind of more just show up and talk, and he's like really doing all the work in the back end, which
I listened to a few of them. You're definitely slugging.
yeah, they're thorough, man.
Yeah.
It's a lot of work. I mean, I think the reason we've experienced the success outside of just piggybacking off these guys who are doing an amazing job, Dan coined the term, our pod fathers, which I love.
Yeah.
They made us an offer we couldn't refuse. And, they've been listened to over 2 million times. Like, these guys are really doing it, right? But Braden's been doing it since, he's in his mid-20s. He's been doing it since he was like 14, I think.
Yeah.
So,
Really?
Yeah.
So they've come a long way, and being able to learn from them all the different aspects of even just naming them, and how to name them, when to release them, the consistency, all that kind of stuff. We've learned a ton. But we were doing podcasts and creating content for, a year, if not more, without any monetization, anything like that. So, and I think the other reason we've experienced success and we've been able to get to that monetization is we've decided to do something that no one else is doing in that real estate investing space. And this is not to knock any other podcasts. Obviously, we did the very same thing that everyone else did, which was interviewing other realtors, other mortgage agents, other real estate professionals, investors. And it was fun. We did that for a year. We had some great guests on. All those guests are now friends of mine, friends of ours. But there was no platform where you could go and get news. There was no platform
Right.
where you could go and get well-researched stuff. And this is what Dan and I were doing all day, every day anyways, right? We're researching what's going on in China, what's going on in New Brunswick, what's going on in real estate across the country. There's new headlines coming out every day. Everyone's more concerned about mortgages than they ever have been before, maybe since like the 70s. So we just decided let's do a full-blown researched approach. And I think that's why we've been able to accomplish what we've done so far.
Yeah, it's funny. Like, I think the attention right now is on all that stuff, right? Like
Everyone's a news addict to begin with.
Man, it's crazy. Well, and actually, it's funny. The guys on the Canadian Investor Podcast say it. Like, on the way up, everyone's a genius, and on the way down, everybody's a macroeconomist, right? and like, it's so true. I don't think anybody even really knew the function of the Bank of Canada until like a couple of months ago. Like on average, the average person didn't really get it, and now all of a sudden it matters, right? Because they're like, they're like actively kind of ruining everything. The party's over, right?
Yeah.
I think like when we spoke last, it was like they just didn't do the rate hike, and then the coalition was announced, and I was like, shit, they're gonna put out some policy probably soon, and they did, like I think that day or the next day or something.
We spoke literally potentially on the peak day of
actually
the whole
was.
COVID freaking regime and response.
Yeah,
Good
no, it
timing.
was so true. And the market started rolling over that day, like that week, I think. I mean, prices have been down nationally ever since that day.
Yep. So explain to, like, let's set the stage a little bit for someone who's maybe someone who's like, I don't know, 17 and just looking for the first house and has had their head in the sand, or someone who's literally been in a bubble and hasn't kind of followed along what's happened in real estate in Canada, kind of, I guess, leading up to COVID, and then now. Yeah,
so basically, Canadian real estate went on a bull run basically since the middle of 90, I think it was like 96 was the last time we saw like a meaningful, like that. If you were to kind of calculate like a long-term average growth, that would be the starting point. That was like the last time we saw a major trough in Canadian real estate. And that was after the last cyclical event when, you hear all the time house prices from 89 to 94 dropped like 30-40%.
Right.
Since then, basically, interest rates have been getting cheaper, right? Monetary policy has an impact. And in 2008, we saw what happened in the U.S., but I think it introduced us to these new concepts like quantitative easing, number one, and the idea of net negative interest rates. Right?
Explain that. Okay. Explain what a net negative interest rate is.
Yeah, so basically you can borrow money less, or net the rate of inflation. So if you take inflation and subtract the interest rate, you're basically borrowing money for free. Like even if you bought a consumer good, hypothetically, if depreciation didn't exist, you would have made money just by owning that consumer good for a year because inflation outpaced the interest rate.
Right. So you're borrowing money at a lower percentage just on the face of it than inflation is happening at.
Right.
So it's net negative.
Right.
So it makes sense in all cases to borrow money and buy things with that borrowed money.
Right. Yeah. It's like I think it just introduced this moral hazard to the economy where central banks and financial institutions that lend money out for them functionally in Canada basically are like, you hear in like the investment community lever up and bro down. I mean, like that's what we've been doing in Canada for some time now.
Yeah, absolutely.
And 08, like we saw a small sell-off and then it was just a rocket ship because rates were so low and everybody's like, let's just borrow money and buy some Canadian real estate.
Yeah. So then COVID hits and the Canadian government's response is print more money than we've ever seen in human history.
Yeah, hypothetically, I think we tripled our balance sheet, I believe, right? So I think per capita, we had the highest, was it per capita, per GDP, we had the highest balance sheet expansion in Canada, right? So, and I don't know if that necessarily is the problem, but I think the problem is that, in the U.S., and maybe we talked about this last time, but in the U.S. you have this big spectrum of businesses that if you want to buy bonds off of, there's a lot of places you can put money into the economy to spread it out. In Canada, we have a very limited scope of businesses that you can invest capital in, right? Yep. So if you're buying bonds, you're buying it off of what, like a couple of telcos. Every major industry in Canada is an oligopoly, right? Yep. Banks, there's 6 of them. Telco, there's 4 of them, right?
Yep.
ISP, there's 4 of them, and they're the same as telcos, right? Natural resources, same thing.
Yep.
And so that money doesn't end up going, there's not a lot of mobility, right?
Right.
The velocity of it isn't. And so a lot of it ends up into residential credit. The banks are like, oh, we have all this money. It's cheap. What are we going to do? We're going to give it out to consumers at next to nothing.
Right.
Like, you were getting, I don't think we'll ever see interest rates like what we saw last year ever again in our lifetime. If we do, like, there's a serious problem with the economy.
Yeah. Yeah, absolutely. So interest rates are stupid low. They printed a bunch of money.
Yeah.
And, you know, there's immigration. We're not building a crazy amount of houses.
Yeah.
And house prices just skyrocket during COVID.
Yeah, basically.
Everyone's hobby is realtor.ca.
There wasn't really anything else to do. I think, like, legally, that was like one of the 5 things you could do is like take your dog for a walk, like do yoga in the park in the middle of winter, and yeah, browse houses on realtor.ca, I guess.
Yeah.
Yeah, I think that, you know, that, and also combining that micro effect of people leaving cities, right? Because like cities were useless, functionally obsolete for 2 years because of lockdown. So it was like, oh, everybody's going to buy a house in the suburbs.
Yeah.
It's like really good for teaching people the geography of Ontario, I think.
Yeah, no kidding. Other than minor hockey.
Yeah.
Oh, man. So then we spoke last, probably like we were saying, kind of on that peak day. And now since then, kind of run through what's happened with interest rates hikes and why that's been going on and what that has done to kind of on average house prices.
Do you want to take that one? Because you did the hiking schedule for our recession episode.
Yeah, I mean, they've gone up.
Yeah.
Again and again and again. Five increases at this
I believe
point.
25, 50, 100.
And then
200 bips.
So they've gone up, and it's not that they've never gone up before, and we have a whole episode on this, Canada in a rising rate environment, and how Canadian real estate has
When was the last time they went up in a meaningful way?
The 90s.
90s. Before that, it was the late 80s, and before that, it was the late 70s.
Although you could even say, like 2017, we did see a contraction in house prices.
Right.
There was a couple of different things happening. We talked about this because, like, foreign ownership ban was the topic last time, right? You know, it was in Ontario, we saw a foreign ownership tax. BC, we saw a foreign ownership tax in 2016. There was a downturn after that. 2017, Ontario foreign ownership tax. There was a downturn after that. But rates were also going up in that period of time, right? Because the market was running too hot. And so that was like maybe a blip. But then, and I actually think that might have ultimately rolled over the market and ended up being the end of this cycle had COVID not happened, right?
Yeah.
And then 2020 comes along, and that's when prices hadn't even recovered by 2020 until they dropped rates again, like, and just then everything skyrocketed.
Took off, yeah.
So it's not so much that rising rates are the problem. We've seen that time and time again, and to be honest, rates had to go up from where they were. It was not sustainable. As we just said, the cheap money, right? You can't have a net negative economy like that for too long. It doesn't make sense.
Yeah.
The real problem is, I think, the psychology behind those interest rates, right? So Canadians primarily have been choosing fixed mortgages for decades. That was by far the most popular product in Canada, the 5-year fixed. A little more risk adverse than a variable, even though variables historically perform better than fixed over time.
Right.
But throughout the pandemic, we started to see a lot more Canadians go to that variable rate. It's kind of hard to say no when it's literally, two points.
Historically, the spread was as high as it's ever been. Right?
Exactly.
Right. So it got to that point where a fixed rate is like whatever 3% and a variable rate is under 1%.
1%.
You have to go for it.
It was like HSBC at a 0.99.
There was sub ones. I didn't do any of those myself, but I mean we were doing rates in like 1.2, right? Which is just. Anyone that understands that realizes that that's a temporary thing. That can't last. That's not going to last for the 5 years anyways. So,
and we just did an episode on that risk being realized right now.
So,
right?
that's kind of where I'm getting to is that the psychology is, everyone's sitting at home watching HGTV and selling Sunset and going on Realtor.ca and be like, come on, honey, we can flip a house, we can buy a cottage, we can start a real estate investing portfolio, and a lot of people could, and a lot of people did. I think it's really going to be an interesting 2 years to see who still has that portfolio after we go through the next, year cycle kind of thing. Rates are now, for instance, my variable rate, which I got, let's say, over 2 years ago at 1.92% is now at 4.25.
Yep.
And I'm not alone in that. That's happening to thousands, hundreds of thousands, millions of people across the country. That's going to lead to two things. And this is the episode we did last night, so it's very fresh in my mind. It's one that brings up the stress test, which is now becoming more and more relevant. And again, another thing, right? Bank of Canada, stress test, trigger rates. These are things that most Canadians never cared
Never even thought about.
We don't need to think about any of that stuff. House prices are going up 30% a year, baby.
It's the easiest business in the world. Get rich quick. So what's going to happen now is the stress test has become a lot more real, and trigger rates are now becoming a real thing.
Explain trigger rates.
So a trigger rate is basically when you've gotten to the point where you're paying more interest on your loan. So every mortgage is broken up into two payments, principal and interest.
Right. Principal is like the actual money you paid for the house.
So if you're paying,
back.
so let's say you got a $3,000. This is not a real example. $3,000 mortgage, $1,500 goes to principal, $1,500 goes to interest.
Sure.
The principal is actually you buying your house back, right?
Yeah.
That's $1,500 more every week or bi-weekly or monthly, whatever. That other $1,500 is what you give to the bank for saying, thanks for giving me the $600,000 to make this happen.
Yeah.
Now, there's a lot of different types of mortgage products, but what's starting to happen is those are getting very skewed. So that $1,500 split is now looking more like $2,000 and $1,000, or even, $2,200 and $800. And when that $800, which is your principal, gets lower and lower and lower, you'll get a call from your bank, call, a letter, maybe even a door knock, depending how wild this gets. But they'll basically say, look, you're literally just paying an interest-only loan rate now.
Yep.
And if that goes higher and you're paying more than, and it's like the entire payment's interest plus,
right,
you're not paying anything.
The bank says, hey, we gotta rethink this.
So that leaves you a few options. And again, this is all in our podcast that we just did last night. So if you want more detail, go listen to that one. But I won't go into everything here. But it doesn't leave you with the great options. Basically, you've got to lock into a fix. You got to figure out a lump sum payment, or you've got to increase the cash flow or the value of that property. So there's going to be a lot of Canadians, whether you're just a homeowner that's living in a single family home with your family, that are coming up to these trigger rates, or there's going to be a lot of people that have investment portfolios that are now losing money on their cash flow. That's fine if you can service that for a few months and kind of weather the storm here. It's not fine if it gets to the point where, if it gets to a certain point. That's a very subjective thing.
Right.
So we urge everybody to just be running those numbers. And again, it goes back to, if you bought a house and you didn't run the numbers, you only ran your numbers at 2%, 3%, 4%.
Right.
You weren't even doing your own stress test. I mean, the bank's going to go do the stress test.
But the stress test
you.
wouldn't even really necessarily account for that extreme situation,
exactly.
right? Like, because if you were borrowing a variable last year at 1.5%, let's say, you're getting stress tested at 5.25%. There's a chance by the end of this hiking cycle that you're above that 5.25%. Right. And when you get there, it's not like, those rates are happening on, the trigger rates are happening on static payment variable mortgages. So those people their payments weren't changing at all. So let's say it was that $3,000 example. Now all of a sudden the bank's going to say, look, you're not servicing any principal. We're going to lock you into a fixed for a year. You can always go back to your variable if it comes back down.
Right.
But, and now all of a sudden, if you're going into a present day fixed mortgage on the same amount of principal, on the same amortization schedule that you had at like a 5% or, probably a 5% rate, let's say, your payment just went to like $4,500, right? From $3,000, let's say, in that example. Like, so there's, people are always like, oh, there's no risk in Canadian real estate. You'd have to see an extreme amount of financial stress for that to happen, and distress selling and whatever. I mean, the reality is, I don't think that distress selling is how this absolutely destroys the economy. What happens is capital costs make Canadians forced to tighten their belts. Yeah, we have a lot of people with a lot of equity in their houses right now. Sure. But we also have a lot of people with a lot of mortgages. Mm-hmm. And it's not like they balance each other out. It's not like the people with equity are out spending their equity because the other people aren't, right?
Yep.
That's equity. It's not realized. It's not mobile money.
It's not liquid cash in your bank. Yeah.
But that money that people are now having to pay on those increased mortgages on a monthly basis, that's money that's not being spent in the economy. That's economic contraction, right? So to me, this really shows up in weakness of the Canadian dollar eventually, contraction of GDP, right? Contraction in consumption. Like, I'm more worried about the Canadian Tires, or now, the new Zellers coming. HBC's bringing back Zellers.
Yeah.
Like, those worry me more than, RBC, they're diversified, right? Like, I don't think if you're shorting the Canadian housing market, you're shorting RBC. You're probably shorting the Canadian dollar, to be honest.
Right. So I guess, it kind of begs the question, when does this, to explain to the layman, why do we need to increase interest rates in the first place? Why did that have to happen?
Well, I mean, according to all the people on TikTok that responded to our last podcast, we don't need to, because monetary policy has nothing to do with inflation.
Right.
But from my perspective and most economists' perspective, monetary policy is a tool that's used to cool the economy when it's running too hot. And we could argue that a component of inflation has to do with interest rates. The funny part is, today, I guess, is it the 18th? Yeah, August 18th. Inflation printed in Canada a couple of days ago, and it's coming down 7.5%. I haven't even looked at the StatsCan data because they do have the granular of like what went up and down.
Okay, yeah.
And I've been meaning to analyze it. But in the U.S., their print was last week. Theirs was down as well, but the biggest component of that drop was fuel prices, right? And so, and the biggest component the biggest increase was housing
costs.
Housing costs, exactly. And housing costs are positively correlated to interest rates, right?
Yep.
In the short or long term, capital costs increase, developers develop less, capital costs increase, landlords charge more, et cetera, et cetera. So there's this battle kind of going on where monetary policy has a pull factor up on inflation on that piece, and you can't say, like, it's not like, oh yeah, congratulations, Federal Reserve and Bank of Canada, you guys cut fuel prices in half. Yeah. They had nothing to do with that, right? So I agree those components have nothing to do with monetary policy. The borrowing of money, et cetera, those things all have to do. And the housing piece that's still moving up is the part that needs to come down, needs to cool down, right? So monetary policy is used to basically, as they increase the rate of the interest rate, people don't want to borrow as much money. It starts taking money out of the economy. People, in pure economic terms, people will save more, right? Because the interest rate's higher, so they're going to go put more money in the bank.
Yep.
That's a hypothetical, but the idea is that
at least costs them more to go borrow money.
Yeah, hopefully they're borrowing less.
Right.
The reality, though, is that we're still borrowing at net negative, like we talked about earlier, right? You have a 7.6% interest rate, and I can go get a 7.6% rate of inflation, and I can go get, and I don't think anybody believes inflation is 7.6%.
No,
right?
everyone thinks it's way more.
Right. It has to be like, yeah, exactly. So, and I can go borrow a 5-year fixed at 5%. Like I should lever up. Like
you're still ahead.
I would be an idiot to not go on and take as much debt as humanly possible.
Yep.
Right.
Yeah. Or a conservative operator.
Right.
Yeah.
Yeah. So yeah, I mean, I'm interested to see how the whole thing shakes out, but I don't think it's going to be pretty for Canada. I don't think most of the Commonwealth is going to fare very well
compared to the U.S.
Yeah, I think the U.S. and some other areas. Like I think that, beyond the major challenges that China's seeing in their real estate market, I think the Far East is like, we talked about this last time too, right? Like there's a jockeying of power. We're not in a centralized power world anymore, right? So I'm interested to see how that plays out as well. And we're staring down the barrel of potentially another 2008 scale of real estate collapse, which these are levered assets. There's a lot of toxicity to the debt. It's a debt-based product. And now in China, you have this massive unwinding happening there too, right?
Yeah, I've seen some pretty scary stats on what's happening in China. You guys have a couple of those fresh off the top of your head?
Even just this morning, there was that Twitter feed that 66 million vacant homes in China.
Unfinished inventory.
Unfinished inventory. So, just to put things in perspective, Canada needs 6.5 million homes by 2030 to match our housing demand. China currently has 66 million vacant homes. I fresh in my memory from an episode we did as well. 23 out of the largest 100 developers in China have either gone to their creditors and said we're not paying, or they've asked for an extension and they put major projects on hold. And then I believe 35% of Evergrande, which is the biggest developer in the world, which now has the biggest debt pile in the world, 35% of their projects are on hold.
Wow. And are they in China?
They're in China. Okay. So they operate all over China. They've got, at one point had thousands of projects going on. And we're not talking projects like we've seen around here in Canada. Like we're talking...
They're building cities.
Like they're building like City Place, for instance, right? Which was one of the biggest developments in Canada ever, if not the biggest kind of planned development.
Yeah.
That's standard for them over there, right? So when we see, okay, there's a couple projects being canceled here, times that by 1,000 and you look what's happening in China. And then you add that on to the fact that there's now major strikes, people, like millions of people not paying their mortgages.
In China?
In China.
And that's not even like a political move that they're not paying their mortgages. It's just that like the developers ran into capacity issues and they're not handing off the units the way that they said that they would. So they're giving people like unfinished units. So
people have been living in unfinished units.
So they're like, I'm not paying my mortgage on this thing. Like it's not what you...
Right, there's no front door.
The deals, the deals
literally.
Yeah, exactly. So but it's a mess.
That's crazy.
And
all within the framework of a totalitarian government.
Right.
Yeah, whatever. Yeah, let's not... Yeah, we want to stay off the CCP's list here. But,
I don't think we're on the
list
radar
here.
yet.
But it's funny, just on a little anecdote in the back end of our podcast, I love seeing all the random places people listen, right? So we've got people listening in like the Congo and Tanzania, Argentina, Madagascar. Dan and I said
that or like it's just like some
IP
Canadian,
address.
Canadian guys like
some weird IP address rerouting there, but. There's 3 places that we have not hit that I won't stop until we get, and that's North Korea, China, and Russia.
Okay.
Those are just blank on our map right now. So,
so we're good.
We should be good. We can say whatever we want.
Spies are listening from Canada anyways.
But so the question is there a degree of risk associated with this in the Canadian market? Because a lot of people like to talk about the impact of Chinese money in Canadian real estate, right?
For sure, you hear that.
Yeah, you do. Like it's like this thing that we talk about here, and we analyzed it pretty heavily. I think from a foreign direct investment perspective, there's minimal risk. Like most of our foreign direct investment, which is foreign capital buying stuff in Canada, China's not even in the top 10.
Okay.
Right. Yeah. There's a lot of migration from most countries, or I think our 3 primary areas of immigration are from the Far East. I think it's India, China, and Iran right now.
Okay.
So Far East and Middle East, and a lot of capital comes with those people because they buy houses in Canada, right? CMHC released a report recently that basically breaks down the impact of housing, or not the impact, sorry, the statistics of housing ownership by race in Canada, and Chinese Canadians they have the highest percentage of home ownership as a group. So I think it's like over 90% of Chinese Canadians own their houses. And the next piece is they have the highest value of homes on average. And they're the only ones across Canada that have a value over $1 million as of the 2016 data. There's no updated data set on that. They just released, I think it was like 2011. No, what was it? It was like 2000.
It's like every 5 years.
Yeah,
every
but
3
they
or
don't
4
have they don't have like recent
big changes since 2016.
Yeah,
right,
a couple. Yeah.
Right. But I mean, and 2016 was when you were really hearing that sentiment among Canadians start with, and the foreign ownership ban was like those were the targets of that, right? Like that it was trying to in BC they were trying to sort of squander the impact of that on making housing unaffordable, and in the same token in Ontario in 2017 that's what that policy was designed for. And then when we spoke last, right after the coalition government happened, we saw an outright ban on foreign ownership in Canadian real estate. I think statistically, actual foreign ownership, so non-Canadian residents, own like 3.5% of real estate in either of those markets. It's like between 3 and 4%. It's really low, right? So that's why, like I had mentioned, I felt the policy was spineless.
Yeah.
The reality is we don't even have a beneficial ownership registry in Canada. We don't really have an understanding of how all this, and how all of this stuff is going to work. So I think functionally, like, it's impossible to know whether or not there is exposure. I think that the reality is there's exposure on a global scale to...
Well, that's my question is how kind of interdependent and incestuous are all the markets with the Chinese real estate market? Like, I have no idea.
Well, I think we're about to find out, right? Because I don't know if there's direct correlations. Like, it's not like, it's not like CMHC is selling mortgage-backed securities in Canada to Evergrande, and
Right.
now Evergrande,
If they go, we're the next
or
pillar.
it's not the domino effect.
or like they're going to call those securities or something. Like it's not like the U.S. in that sense where it's mechanized.
Yep.
I think what the impact is that you have this huge, like in Canada, you have this large Chinese diaspora of people who've immigrated to here. You see a lot of capital. They're covering positions that are now negative in China, either in the equities market or in the real estate market. That money comes out of Canada. That money comes out of the U.S. That money comes out of other areas, right? And so the question is what does the negative wealth effect look like?
Right.
In
Of people
all of these-
trying to pay their debts in China.
Yeah, as a lot of that capital starts to repatriate into China to maybe not even just debts, but it's like liquidate other assets to get into a better equity position or whatever it is. Because we're seeing this deleveraging happening in the real estate market right now, even in the development space. I'm seeing developers want to downsize from 5 projects to 1 project just to focus, right? Because it's not a market where you can run hot anymore. So I'm interested. That's probably the biggest, from my perspective, the biggest thing happening in the world right now economically that's going to have a major impact. And like, people are comparing it to the Lehman Brothers moment, and I think that.
Is that why you wore that hat today?
I always wear it. Yeah, but
I always wear that.
but yeah, like I mean, that was at the beginning. I think it was like March of last year was when Evergrande first defaulted, and it was $600 billion, right? Which is what. Or was it $600 million? I think billions would be a lot.
I believe it's like 300. I think I misquoted in our episode. I thought it was 89 billion, but it's like 300 billion because the Economist just put out that study.
Yeah,
So I mean, they got greedy, right? Like
Yeah.
they started an EV car company. They bought a soccer team. They tried to diversify into literally everything.
Really?
And it's just like, stick with what you know, especially if what you know isn't going well.
Yeah. Like,
Maybe fix that.
We don't
first.
need EVs, guys.
Like,
we need our houses
don't
to be
build
done.
don't build an electric car until this development is completed. But there was also a lot of President Xi Jinping was saying that houses are for living and not for investing, and that's I think a large portion of the Chinese population who was only recently in the last few decades allowed to buy housing started to look at this, and it was the same sentiment as Canadian real estate. Man, this is an amazing investment. It only goes up. It's never gone down before. Well, it's never gone down because it only has like a 20-year history.
Yeah.
Right? So you're going to go like this for the first 20 years. And I think that they really overextended themselves. I think the developers got greedy, and it kind of turned into a bit of a Ponzi scheme at the top. And
it's interesting because, I mean, like the most logical place for a business to end up in a place like China is to be nationalized, right?
Well, yeah.
And so a lot of these there's really no, when you have a debt pile that big, like in the U.S. there was bailouts, but I think in China it's like, well, these are just ultimately going to become these
state-owned.
Yeah,
They'll just absorb it.
Yeah, which is an interesting piece of the puzzle from my perspective, because you hear a lot of talk, and like TikTok is really interesting from my perspective with this stuff, because you have a lot of teenagers who, in a lot of cases, like don't really know what they're talking about per se, but like are willing to try to talk about it.
Well, try to give some financial
advice.
advice.
You've got to be the fool first before you learn anything.
Yeah, for sure.
Remember when Wikipedia was the sketchy source of information? Now it's TikTok. Come a long way.
But people talking about the government needing to be involved in housing. Like, I don't trust the Canadian government to build housing well at all. Honestly, I think that if you had the current administration, instantly the construction cost per square foot would double if they were building housing, just because they have no clue what they're doing, and every contractor in the market would be bidding on their jobs, and there would basically be a collusion that would drive construction costs up, because everybody would just be working for the feds at twice what they could get for working in the private sector. But China, I think, could do a damn good job at providing housing for like if you were to nationalize a lot of those developers, I think they do a good job. I really do. Like, and
I think it's irrelevant if they do a good job or not. It's going to happen.
Yeah, it is.
They've already primed everyone there with enough propaganda that
they have to do a good job at this point. There's no other choice.
Yeah. No, I don't trust the Canadian government to deliver my mail or paint the roads right.
Yeah.
Fix the roads, even though there's $5 million a year in property tax.
Just call the CRA, tell me how your experience goes with them, and let's see how well things go when you try to tackle housing.
Yeah, no kidding. The so this kind of effect of this COVID inflationary effect, really widened the kind of wealth gap in Canada. Like we were saying on the last podcast, there's less and less middle class.
Yeah.
Where does that lead to as far as kind of who owns all these houses now that people are living in?
Yeah, I personally think we're heading for a European model of homeownership, like Switzerland maybe being the best example, just because they have the lowest level of homeownership but the highest net worth. I would hope that Canadians will invest their money in other places. Like we just have this obsession with using the primary residence as a wealth vehicle, right? 70% of the Canadian net worth is concentrated in the primary residence. So you could just guess as to what that means to the net worth destruction that just happened in the past 6 months, right?
Right. But I think that it's more than, like, there's different factors. Like this North American kind of mindset is different than the European mindset. You know, everyone whose grandparents or great-grandparents left Europe, they left for more freedom.
Right.
And I think the vehicle for freedom is property rights.
Property rights, yeah.
Yeah.
But do we have those per se?
Well,
like it's interesting
no.
in the conversation about China, because I had somebody on a Twitter space who was talking about whether or not, we're talking about whether or not immigration was a bull case for Canadian real estate. And she was like, a lot of my colleagues from China are actually going back because they can get a better quality of life there, and with the wage and home price, et cetera, you can afford things. And if you would be upper middle class in China, whereas you're lower middle class in Canada, even if you're making if your household income is like $250,000 a year, like it's nuts, right?
Yeah.
And so that's what kind of gives me that, like, where I would allude to like a Switzerland where, it's a country where, you're not making much unless you're like making like $500K a year as a household, right?
Which
like
is crazy.
Right. But there's a lot of people who are happy under that line.
Yep.
And here we don't have that. Like people feel really victimized by the system, I think, in Canada below a certain amount. It's because there's we haven't properly represented their needs, right? And put together like a housing system that takes care of the people who need it. Because the reality isn't like capitalism isn't a perfect allocator of capital, and certain people do need support with those things, and we just don't have a government that understands how to properly do that. If anything, they're actually actively standing in the way of doing that, right?
Yeah, I mean, from my limited perspective, I would argue completely that they're standing in the way. They're, like they're not going to be the ones who are going to step in and build low income housing. And it has to be paid for by someone, so it has to make sense. It has to be profitable. They need to get out of the way and allow developers to build something that makes sense.
For sure. Yeah, and municipal elections are really what's going to determine that, I would say, over the next couple of months. I really think, right? Like Toronto's municipal elections will be, a lot of people seem to think that John Tory's going to get reelected, but I would be very interested to see if that actually happens. Yeah.
Yeah, I mean,
go ahead.
I was just going to say, I agree with what you guys are saying. Looking at all the data we've looked at in the past several months, Canada has really skewed itself from a statistics point of view with Vancouver, Toronto, essentially Vancouver and Toronto, and even the GTA. I'm going to paraphrase this and get it wrong, but I think it's 1 in 4 Canadians live in the GTA. And then
maybe Greater Golden Horseshoe, but yeah.
Oh, sorry, it's the Golden Horseshoe. Yeah. So
okay,
1 in 4 Canadians live in the Golden Horseshoe, and then 90-something% live within 100 kilometers of the border.
100 miles, yeah.
100 miles of the border. So, okay, screwed both of those stats. We're good.
That's what I'm
We're
here
good.
for, man.
We're good.
As an elephant.
So that being said, we're only really ever looking at essentially the Golden Horseshoe.
Right.
Like that's where the stats come from, right? Yep. Like if we looked at Winnipeg, Regina, Moncton, New Brunswick, a lot of the places that have come up a lot on the podcast that we've analyzed stats for, those are the places where there's real opportunity. And those are the places I'd like to see our government do something about, right? I mean, if you go to Saskatchewan, I can't remember, someone was just telling me a specific city there, but essentially the only thing there is an army base. And that is literally what brings in everything. Why don't we try to focus on building out, incentivizing people to go and live in those places, right? So whether it's putting some type of government subsidized business, like subsidizing any business that wants to go to one of these lesser, less sexy spots in Canada, that there is a ton of opportunity. I mean, you can buy livable places in Saskatchewan for as little as $30,000 to $50,000.
Yep, for sure.
That's a parking spot in Toronto.
For sure.
Yeah,
for sure.
And it's it does actually like make you wonder whether or not like what I had just said about the renters economy would happen in maybe those bigger cities, but
Exactly.
then you almost get an effect like the US where you have all of these like flyover areas that now have become popularized because of COVID, but in Canada could start to happen. It's like maybe you just need to give them each a MLB team and like an NFL team, and they'll be like, you know, like, could we maybe like...
Well, it's not, the CFL doesn't cut it.
No, maybe they just get
No,
absorbed
no,
or something. We're going to broker that deal, right? And then, because like in the States, it's like I know the name of more U.S. cities than Canadian cities, probably, right?
For sure.
Like, they all have their own identity.
Yep.
They're all like different. Canada is like almost the opposite of that. Like I feel like you drive to any city or any like town in Ontario and like you can see the same subdivision.
Oh, for sure. As far as suburbia goes, yeah.
Or you see the unique historic downtown, which is literally the exact same.
Copy and paste Southern Ontario, some Presbyterian church.
Exactly. Yeah, one steeple, a couple brick buildings, and boom, there you go. It's just history right there.
Yeah, I mean, like I think it could happen naturally, though. You know, as far as people taking their wealth, selling their house, taking their bag, and going to move to frickin', you know, Moncton.
Yeah.
Yeah,
You know?
It could. I don't like. I guess it's going to depend on how much it continues to cost to live in the GTA. Because like I think that like the thesis that it is sort of like this world-class city and people want to move here is relatively correct. And there's major costs associated with that, right?
Yeah.
And people are going to get pushed out. Like the challenge is like, do you start to see young people leaving, right?
Right.
Because they're like, this is a ripoff. Like I'm going to be on a hamster wheel for the rest of my life.
Well, and that's the thing. It's like I think we're so biased because we all grew up in the GTA that everyone deserves to live in the GTA or the world owes you to live in the GTA. And it doesn't, man. Yeah. You could live in Wichita. You could go live in the middle of Saskatchewan and, you know, do whatever and farm and, you know, live in a $30,000 house.
Yeah. Man, just Paris of the prairies, like seriously.
Yeah.
Like but there's like those are beautiful cities.
Oh,
Two beautiful cities. Calgary even is like a great city. And actually I found out recently as a data point that has on average cooler climate than Toronto. Yeah.
Calgary.
Yeah.
Yeah.
Or sorry, warmer climate.
Warmer.
With the wind coming off over the mountains or whatever.
Yeah,
on
she
average,
gets hot out there in the summer.
It does it? Yeah.
We raced just south of 40 minutes south of Edmonton.
Right.
And that's some of the hottest races of the year.
Really?
Yeah.
Wow. Interesting.
Yeah, you can see the wildfires burning in the distance.
Right.
Not this year, but in the past years.
Wow. Cool.
Very California style.
Oh, yeah.
And I think Calgary, a lot of people are actually being attracted. Like you're starting to see political migration in the States and in Canada, I think. Like there's a degree of that happening globally as well. But like, you know, a lot of people going to Sunbelt states, right? COVID changed a lot of things from that perspective. And, you know, there are like, I think we talked about this on the last podcast too, right? The extremes becoming more and more polar, right? And people
politically,
and so people are kind of trying to find a geographical area that represents what they are about too, right? Yep. You see that on the left too, political migration. But,
for
but
sure.
on the right side, I think Alberta, you know, like probably saw quite a bit of that, to be honest.
Yeah, I've you know, anecdotally, I was trying to buy a house around here in the last, I don't know, call it a year ago, and this was peak COVID, right? And the reactions at the front door were, you know, one side or the other side as far as, you know, me knocking on someone's door during COVID. And the number of people that I heard were like, I'm getting out of this place, I'm going to Calgary or I'm going to Florida was astronomical.
Right, yeah. Crazy.
Yeah. Well, we've even seen that. So we've gotten a bunch of emails from the podcast so far nationally, which has been really cool because it's provided some great insight into the struggles of a Canadian that I would have never spoken to or heard their story from. And a lot of them have been migrating from Toronto and Vancouver to other places, right? Just being like, yeah, we sold our house in Vancouver, made a pretty penny, and now we're going to go buy 2 places in Calgary.
Yep.
So it's really interesting to see the kind of the shifts that this economic
and if the
disparity
jobs,
and
if the jobs end up there, then those cities will be like, I'm more bullish on. I think Calgary is probably one of the areas I'm most bullish on right now. Quebec City a little bit too, from the resurrection of tourism, etc. But I mean, Canada, we like when I talk about the Canadian dollar being the short opportunity in Canada, like we need to decouple housing from our dollar or our dollar from housing right now. Like, and that requires economic diversification. Like, we're the second most resource rich country in the world, right?
Oh, yeah.
So why are we not
We're just chilling just chilling on those resources.
Well, and it's
now.
like you have the States who is going to come in and do that for us, basically, right? Like, just will become this,
satellite.
yeah, seriously, like a resource playground for somebody, America or China, likely.
Yep.
Right, to come and extract these things and use their system that they have economically called capitalism to make money on those resources, which is like what's happening anyway. Like, most of the electricity from Quebec gets like sent to the States, literally, so there's line loss, and then sold to Ontario anyway.
Yeah, which
right?
is
like,
just
it's just like, yeah,
brain damage to think about.
We're playing
Right.
ourselves, yeah.
Yeah.
Also, what was that? What did you just say? Playground, the
resource
playground.
Yeah.
I like that.
Yeah.
That's
That's what we're gonna be,
that's good.
for sure. And like, yeah, I mean, you got battery metals, like you got lithium ion,
Fresh water,
commodity metals,
timber.
fresh water, timber, like all of the, like, it's like, I just don't get it how, and we're so far behind now. Like, you just left a lot of opportunity behind. We need to diversify into those, and I think it's an administrative problem, right? I don't think we have, or it's a political problem. I don't think we have the government that's capable of doing that, right? Like, they're like focusing on these $1 billion stimulus bills rather than saying, hey, like, maybe if we plan for the future and build an economy,
Yeah.
then
Yeah.
right.
Yeah. Jeez.
Like, we're exporting STEM workers in Canada. We train some of the best people in,
Right.
like Kitchener-Waterloo, right? Like, people are all going to Silicon Valley. It's crazy.
You guys are looking at, like, you were up in Quebec City.
Yeah.
And you're looking at kind of all these different spots within Canada.
Yeah.
Are you looking to, guys, like, personally invest in these places, or just doing? Yeah.
Yeah.
And what kind of assets?
Multiplex, probably.
Multiplex.
Yeah, like minimum. I don't think I'll ever buy a property with less than 3 doors again.
Okay.
Likely.
Yeah.
I just don't see, like, it's just not, it doesn't fit the mandate from my perspective. Like, I want to be a housing provider. I don't want to be a housing speculator, because I think I think everybody wants to demonize, like, investors, but it wasn't investors who caused the problem. It was speculators, right? There's an important distinction. Like, the Bank of Canada has the data. Basically, people who were buying their second home was like like, you can see it. That was the problem, right? So it was people who feel like a genius. They're like, oh shit, I'm good at this real estate stuff.
Yep.
Just made a 30% year over year return.
Yep.
I'm going to go lever this puppy up and buy a house, because I'm going to retire a billionaire with this strategy. Do this once a year. Just lever it up, right? 30% gains.
Every year.
Yeah, every year. And so, like, that was what the problem was. And these aren't career investors. Like, the demonization of investors, from my perspective, is stupid and needs to stop, right? Career investors they weren't buying during COVID. They were all selling stuff. They were literally offloading properties to these idiots who, were levering up and buying houses. And the ones who are second time, like, the lever up buyers, they have inexperienced realtors. They've only transacted a couple of times in their life. Like, when you hear about exuberance, that's who was responsible for it.
Right. I mean, yeah, like, the investor or the actual landlord who's a real operator is creating value there. He's providing housing, like you said.
Yeah.
So that you guys mentioned on one of your first episodes that you guys were going to kind of circle back with your audience about your own personal portfolios.
Yeah.
Can you give me a brief overview of what you guys are looking for, what you have?
Yeah, so I'm mostly exposed to Northern Ontario. I'm waiting on a closing for my last GTA asset, so I'll be, like, fully out of the GTA.
And what's that?
Place in Newmarket.
Okay.
Yeah, it's a house with a detached ADU.
Okay.
And it's sold. It's just waiting for closing. That keeps getting delayed because of financing issues right now in the market. But yeah, so the rest is all in Northern Ontario. I don't know, probably just over a dozen doors.
Long-term rental.
All long-term rental.
Yeah.
Most of the tenants are either unindexed pensioners on some sort of welfare program, which I actually take pride in providing housing to those people. Nobody else wants to cater to the OW or ODSP tenant. So that, or people working in the mines or in the trades up in, I'm like at rural Sudbury, right? So,
okay.
So that's basically what I'm doing. And I want to try and find more housing opportunities like that across the country. I don't think there's enough opportunity in Ontario with where prices are right now, but I want to kind of cater to people, like, basically like your Section 8 stuff in the States, right?
What's that?
Section 8 is basically like a government program where the government pays for the rent of welfare recipients, Section 8 housing recipients they pay it directly, right? In Canada, it's similar, but like if you get ODSP or OW, which are massively undervalued, by the way, like they're getting $700 a month for shelter allowance. And you can collect that directly from ODSP or OW, but then obviously they're in most cases topping it up, because I don't know anyone who has $700 a month rent in Ontario.
No, I do.
Yeah, you rent to them. but so
couple of slum landlords here.
Hey, come on now.
No, but we take
myself.
but we take good care of the properties and provide housing to like people who nobody else is lining up to provide housing for. Right?
Yeah,
and
absolutely.
That's what I want to continue doing, is creating affordable housing. That's sort of what my goal is. And
I like that. Yeah. And what are you looking to do? What do you?
Yeah, I mean, look, very very similar to Dan. I don't own anything in. I guess Peterborough's in the GTA. Is it technically? No. Okay, so I don't own anything in the GTA either. I don't desire to own anything in the GTA. I mean, the stuff that I would like to buy is either a bad investment or too expensive.
Yep.
I own property in Cornwall. Very bullish on Cornwall. Actually, looking at some deals there right now. Peterborough as well.
We should just talk about that duplex. We'll fundraise for it right now.
Yeah, we should. So I just found this. I just found a duplex up in Cornwall for $179,000.
There you go.
The cash flows.
That's like a pre-COVID price.
Yeah, and I mean, like, look.
Who manages these things for you? Like, are you driving all the way out to Sudbury all the time? Are you driving out to Cornwall?
So
he's managing your stuff too?
No.
Okay.
So we just got to the scale of getting a manager on the Northern Ontario stuff.
Yep.
But yeah, before it was me and Johnny actually. Driving up there, spending time in the truck.
I put 25,000 kilometers on in 5 months last year when I had a bunch of active stuff going on up in Cornwall. But once you get the places rented and the tenants are in there, and really once you have a bit of a team in place, right? Like, you can become a lot more hands off, right? I mean, for instance, I had 2 phone calls from Cornwall tenants this morning. Put me in a great mood to come to this podcast, of course. Seeing those calls come in.
They just wanted to tell you how good a job you're doing?
Yeah, you're going to do great, sweetie. No, it was, it's cold in the basement. I don't know. I don't even want to get into it, because it's just been very frustrating the last 2 weeks, because every single property I have has something's gone on in the last 2 weeks, from bats to plumbing to someone being cold. I mean, I try to do 2 things. One, I like the part of being actively involved in my assets right now.
Sure.
I feel like anyone should, especially at the beginning. I've only been doing this for a couple of years. I don't have a huge portfolio. I want to know everything about all of them so I can learn the lessons here as I start to scale up. Where you can save time is, again, if you're going to be doing the long distance investing thing, which if you're in the GTA listening to this, you probably are, find good tenants that are going to have pride of ownership and take care of the property themselves. And also, on top of that, build out systems so that when something does happen, a clogged sink, pests, you need pest control or anything like that, you have people that either the tenants can call or that you just, like, I've got a plumber now that I just text and say, hey, can you go back to that unit?
Yep.
So it's become a lot less work for me. And as obviously, as Dan said, as you economies of scales grow, that's why I want to keep investing in the places I already have a stake in, because it'll be a lot easier to, if I go buy one in Kingston and then one in Belleville and then one in Sudbury, well, then I really am driving all over the place like an idiot.
But if I can get a Cessna.
Exactly, yeah, or a helicopter. But if I can own 30 properties in Cornwall, I look at it a few different ways. One, I can be part of a larger gentrification in the best way possible of that entire area. Right, I can help the actual housing improve in that entire area.
Improve the supply of housing.
Improve the supply, and that's really what I look at, and what Dan and I constantly talk about in the podcast is, we've brought it up here: speculation, trader, etc. You're not a real estate investor.
Yep.
Real estate investors buy stuff to add value to them. So I look for properties that I can add value to. I look for properties with a less of a barrier to entry, and that's taken me after enormous amounts of research to the places that I'm in right now.
Let me just pause there. I got to take a leak.
Do your thing.
You guys good?
I might take a leak too, actually.
That's not a bad idea.
What track's behind you?
That's Mosport.
Nice.
CTMP.
Yeah.
That's actually the next tattoo I'm getting. My brothers and I are all getting the Monaco.
They're getting the Monaco circuit?
Yeah.
You're getting one too?
Yeah.
Have you been to the race?
That's literally my life goal. Actually, so one of my life goals, after I've made enough money with the real estate thing that I can start doing some more fun shit.
Yeah.
I figured it probably costs around $200,000. I want to go to every F1 race in one season.
In one season?
Film the whole thing.
Just
do
a
the whole
groupie.
thing. Dude, I fucking love it. I literally love F1.
Really?
Yeah.
So you've been to the Canadian Grand Prix?
I have not been to any.
None?
None, not yet. No.
So what are you going to the first one?
That's a
Are you
good
going to do it
question.
all in one
When are you
season?
taking
all in 1 year.
Yeah, dude, I get taken. I don't take people.
Yeah. I'll take you. There you go. Just give me a couple of years. I'm thinking literally, so I'm 32 right now. This is like kind of a 5-year plan. I figure that finances will be in order. It's also like I probably need 6-7 months of just very little work, and so I have to be very well structured back here. But yeah, I mean that's been a life goal of mine for a long time.
Wow.
Yeah.
Wow. So who's your guy? I've got so many questions.
I'm a big Leclerc fan.
Okay.
It's honestly who's like not my guys because I really like a lot of them.
That's great.
Fernando Alonso,
Yeah.
absolute legend.
Yeah.
Hated to see Kimi go, but it was time for him to go. Hate to see Vettel go.
Well, we're
time
gonna
for
see
him to go.
We're gonna see Kimi at Watkins Glen.
Yeah?
A weekend or two. Yeah, in the Cup car. He's racing NASCAR.
Oh yeah, he is. I forgot about man. I love it. He can't stay away. It's truly incredible. You had your buddy Lance Stroll on. I like Lance just for the Canadian aspect. Fortunately, don't love the other Canadian. He won't go. Well, the GOAT. We will just keep that name out of there.
Well, I want to get him on the podcast. I got to get him on.
He'd be a really interesting guy to have on
He
because
doesn't do
he's
a whole lot
like
of interviews.
controversial in certain ways because of what happened last year with the accident and certain things like that. And poor guy, he got a lot of hate for it. But I'm also of this sense that it's such a coveted seat that if you're not performing, and I mean if you're not performing at all, it's time to go.
Right.
So even with like guys like Danny Rick, right? Absolutely love the Honey Badger, but like, he's made some bad choices and he's probably, I think this is it for him now too, right? I don't know. Did McLaren sign him again? I don't
think
he's
they
kind of
did
up
at
in the
all.
air right
He's
now,
up
right?
in the
So
air.
yeah, I mean, look, I love all the young guys. I love Sainz. I really love Checo. He's not a young guy. He's been around forever, but he is just like the ultimate team player. Max I only really liked because he beat Lewis, and I just can't stand Lewis Hamilton. Sorry to everybody. I'm going to get some flack for that one for sure.
That's the headline. This
For
guy.
sure.
That's what the title of this podcast is.
Real estate
I can't
investor
stand
hates Lewis Hamilton. Yeah. Very relevant information here.
I got to be nice to him. He's got a Cobra that we want to buy.
Of course he does. There you go. We'll just get him to sit in the Schumacher car. And, maybe that'll be.
Well, it's an EV Cobra, right? Because he's net zero emissions or something.
His dog's vegan and plant-based and all this stuff. He's an interesting guy. I'm not a fan of everything he does, but obviously there's no doubt about he's one of the best drivers ever. It did help that he had the best car, best team, biggest budget in an era that no one else could really compete. That all helped, but Formula One seems to do that, right? Up until it seems to go right. It was the Red Bull years before that, and then it was the Ferrari years before that. I miss the old days where it was, a different team winning every couple of years, and that hasn't happened in a long time.
But it's coming around.
It is. It's getting a lot more competitive. I've actually make it my mission to go around and try to tell everybody to watch it, so I'm not the only one watching and screaming at the TV every Sunday morning. I've pitched Dan on it several times, and it's like trying to get him out to golf. It's difficult. He won't do it.
He's too busy working.
Working.
While working and dadding, right? Dadding takes a lot of time.
Yeah, see, I don't have kids, so
Sure.
But yeah, no, that's a goal. I should probably start with one race, but I'm a kind of shoot for the stars kind of guy.
Yeah,
so,
make sure you like it. It's too loud for me.
It's
book all your tickets.
It's funny because it's one of those things where it's probably better to watch it on TV.
It is
because you get all the corners. You don't want to be in the grandstand at one corner in Monaco and not see the rest of the race. But it's more just, I think, being there would be so cool. And again, you get to go to all these amazing places. Like if you actually watch any of the YouTube videos, the back end of how they transport all this shit from country to country overnight, like it is truly insane.
Do they party like NASCAR though? Like,
no. Who
Well, actually, you would know. You would know that.
Who specifically? The drivers?
No, anyone. Like,
oh,
you know, like at
The pit
NASCAR.
crews.
Like
The pit
I've
crews
only
probably
been to
give
one
her-
NASCAR race in my life, but it was like
No, it's
the
pretty similar.
wildest
It's just
thing I've
higher
ever
end.
seen in my whole life. Like that.
Well,
that was
yeah,
Michigan.
There's
though. I don't know
not
what that
free
was.
beer at
They're
F1
not drinking
races.
Busch Lights.
But
They're-
like, you know,
they're
they're making
drinking
nightclubs
champagne.
out of like RVs and
Oh,
stuff
yeah.
like that. Like,
Yeah, okay, NASCAR's a next level. Yeah,
Yeah.
you can go anywhere. Yeah, there's free beer. There's like
Yeah.
a nightclub. Who knows what's going on there? But no, you go to Montreal, like the Quebecers freaking love racing.
Yeah.
We raced at Three Rivers 2 weekends ago, and they had 125,000 people through the event.
crazy.
It's crazy.
Wow.
Yeah.
That's awesome. I love
And
that.
they're freaking like on the fence.
Yeah.
Like they love it.
Yeah.
They love it. But to get back to real
Yeah.
estate stuff.
Sorry, anyways, I had to get that out there, yeah.
for sure. You guys, so you want to build, why just residential real estate that you want to invest in? Or is it,
I
is
want
that
to
the
go.
case?
I'd like to go commercial. I just
Yeah.
don't think I'm not there yet, right?
Okay.
Yeah.
There's a different scale you got to get to. Like I think there's like kind of 3 different levels, right? Like there's people who buy the odd house and can build a retirement out of it, and they're typically with an A lender. I've only ever borrowed from an A lender once, and it was kind of like it was a chance, right? Like,
Yep.
So you end up on the B side, and that pushes like you can end up getting portfolio loans, etc. Eventually, you get bigger than that, and you're almost like in the private equity space. You're doing, fundraising. You bring in equity partners. You're getting, specialized facilities from probably going back to the A lenders, right?
Right.
Because they're like looking for your business now. That's where you start getting into like development and ownership of commercial space. I think that like when the time is right, where I know what I'm doing well enough to build commercial, operate commercial, etc. That's absolutely what I'll do. I think I want to start within the next couple of years picking off some like high street properties. Like I'm really bullish on those like old downtowns that you guys were talking about.
Unique,
Like,
historic.
yeah, like those historic mill towns, right? Like ground floor retail, a couple of residential suites above.
Like on Main Street.
Yeah.
Okay.
Or even in like the city of Toronto, like you can go by in like Corso as an example in Toronto, where Nick and I have some investors looking. You can buy a high street triplex with like ground floor retail, 2 residential above for less money than you can go buy a detached like on the street behind it.
Right.
So there's like, from my perspective, a value arbitrage there, especially as we get into density, as we get more into the institutional ownership. You see more investors owning product. Like end users, you're not competing with end users on that. You're not competing with the marginal buyer. So I think that like those are better priced assets today.
Right. Just because there's less competition
yeah.
to buy them.
So that would be mixed use is probably where I'll end up eventually too. And my goal would be to get some of those, but pure commercial, I don't know. I'm not the right guy for it. If I was, I would do it. Like I have nothing against it. I'm not like, we know guys from our program in Eck Wealth that are excellent at it.
Yep.
Some of the best in the country in commercial real estate. I'm not one of them, I would say.
Right.
Yeah.
Right.
I didn't realize you were a Guelph guy too.
Yeah, we went to university
Yeah,
together.
I was a year, I think 2 years ahead of you guys.
Okay.
Yeah.
At the same program?
No,
Okay.
but at Guelph, I went to college afterwards, but I also spent time after.
In Trappers.
Yes. In one of the cages. Yeah. No, after university, after going to Guelph, I went and took construction engineering management. So I started off my career on the construction side of things,
Okay.
but then also went back and worked at a commercial real estate brokerage for a bit. So similar to answer to Dan, I think that I want to get my hands on as many different, I'd love to, I think it'd be cool to own a gas station. I want to own Airbnbs. I want to own storage facilities.
Those are businesses.
Those are businesses, exactly,
operations.
right? So again, it's got to get to that scalability point where, yes, it's a business, but if you have a business running that business,
Sure.
you're better off. Right now, it's basically just me.
Yep.
Right. So
you're a real enthusiast. You want to taste every piece of the market.
I think it'd be, within reason, and it really comes down to what deal makes sense, right? I was just talking to a good friend of mine who's a private lender the other day, and he just did his first commercial deal with got a couple friends together
as a private lender or as an owner?
As a private lender.
Okay.
And it was in Georgina. I meant to tell you this yesterday. We can go over the deal because I was like, I want to talk about it on the podcast because it's a badass deal. But anyways, when we say commercial, it also doesn't mean, one of the big office towers downtown, right?
Sure.
A commercial can be, this guy was buying it was a triplex as well as an auto body shop. So the whole property was zoned commercial. They went and looked at his books. He wanted to do some improvements, didn't have the money, so they lent him the money on the private side. Anyways, really, really cool deal. And that's, just because you say commercial, I think immediately people, it's the same thing as if you say B lender. Immediately people, there's a connotation with it, right?
Yep.
I think commercial, I'm thinking, what am I buying? Like a Walmart Plaza or a 10-story building? No, a commercial is anything with a business on it. So it's just a different way to analyze stuff. You can do small cap commercial, small cap industrial, which is another thing that's very interesting.
Yeah.
I think I can speak for both of us when it just comes down to a deal by deal basis.
Yeah.
Right now, I want to stay in my lane with the duplexes and triplexes, residential, build out, buy the land that the property's on, buy the property and improve that property. And I think, for a guy that hasn't been doing it as long as Dan, my advice to anyone out there listening that wants to start is your best bet is to start with a duplex.
Yeah.
Or start with a single family home that you can convert to a duplex, but that's still a lot more work. If you can buy a duplex and even house hack it or just buy it straight up, you need 20% down if you're not going to live in it. But that's the way to do it. It's just familiar. Mm-hmm. You know what I mean? Like
everyone's lived in a house.
Everyone's lived in a house. You got grass to cut. There's no you're not dealing with utilities on an industrial or commercial scale, right? You can have one or two meters. It's hydro. It's the same bills you've always been paying if you're paying the bills your tenants are. It's easy. It's a lot easier to set up and to run than it is to try to deal with commercial leases or commercial financing, right? As soon as you get past that threshold, everything changes. Mm-hmm. So stay in my lane for now. But yeah, I mean, obviously early days, definitely want to grow and look for deals anywhere and everywhere across the country and in different asset classes.
You have any good rental stories? Any good tenant?
How much more time do we have?
Yeah.
Holy shit, I got nothing but.
I got lots. I got lots.
Give me your best one.
Actually, the one I had a guy send me a Interac e-transfer request like a couple of days ago for some money of a tenant that I haven't heard from in over a year. Yeah,
he requested the money from you.
Yeah. I'm still trying to figure this one out, but I've decided just not to engage the person because we don't have a business relationship anymore.
Yeah.
But yeah, that was a bad one. Like they completely destroyed the house. To 50 grand in renos they owed me. It would have been like halfway through COVID. Took like about 8 months to get them out of the house. So a lot of people. I've had lots of stories, man, lots. But yeah, I try not to touch on them too much.
Fair enough.
I've got two. I'll just keep them really.
Yeah,
high
you don't have to
level,
name names.
I won't. Yeah. I won't be naming. They would never listen to this anyways. So other than again, when you're doing real estate like Dan was and I still am right now, it's not passive. You're actively involved. As I said, every property of mine has had some issue, and my properties are all in great shape. Every one of them has had some issue between clogged sink, bats. It happens, right? It's just it happens at your house. It's going to happen at someone else's house, even if you own that house. So. Oh, where to begin with this guy? This elder, very angry man who I just went to battle with. I'm not, I don't wake up and choose violence ever. This guy does. And long story short, it all started with like a drip in his kitchen sink, which then escalated to the fireplace needs to be replaced. The washer and dryer need to be moved. This whole wall needs to be taken out and re-insulated. And he started accusing me of being a slumlord and a horrible landlord. And the slumlord stuff really, I really dislike that because I've seen a ton of slumlord stuff.
Absolutely. We all went to university.
Yeah. And one of the reasons I wanted to do what I'm doing is I don't want to be a part of that. I hate landlords that do that because it gives the rest of us a bad name, and that's why we get demonized. Anyways, it all escalated to the point where I was talking to my lawyer almost every day with this guy because he was saying he was going to sue me because there was mold in the place and he's losing his mind. Now, mind you, when this is happening, I'd only owned the place for 4 months.
Right.
So the first 2-3 months were great, and then all this started happening in 1 month. He was trying to add my mom and other family members on Facebook and literally like harassing me and my entire family. I ended up squashing the beef, but I walked into the unit at one point, and I swear, like I don't know if anyone watches It's Always Sunny in Philadelphia, but at one point Charlie has this like, those like string charts where like there's a whole bunch of different things. There's a meme about it. Yeah. So if anyone hasn't seen it, but anyways, you know what I'm talking about, right? Like this guy literally had hundreds and hundreds of photos laid out on and like literally a binder full of documents laid out on his kitchen table as if I was walking into like a courtroom, and he's basically been like, this is why you're done. And I was just like, what? The pictures, after looking at things, I was like, this guy's literally lost it. I ended up speaking to his daughter on the phone, and she apologized on his behalf. She's like, sorry, my dad's just a mean guy.
Yeah.
Anyways, ended up getting that one done. That was just literally like months of just extreme stress. Like I'd wake up in the morning and there'd be so Sundays to me for F1 are sacred, right?
Yeah.
I'm sure they're sacred for other reasons for some people, but this guy I'd wake up to 3 missed calls before 8:00 from this guy on a Sunday morning regarding nothing. Diplomacy and knowing your rights as a landlord are very, very key. Having a good lawyer, a good paralegal, very, very key. I'll finish that one, and I have another funny one. This is not one of my properties. It's a friend of mine that I helped him figure out how to rent his basement suite. He had actually bought the property with a tenant in it. The tenant was just an older guy, bit of a beauty though. Believe he was a veteran with some health problems. And they had gone away on vacation. They came back, and his car was there, but the lights were on. It had been on all night, and there was just some things that they noticed that were a bit weird. So they went down and checked on him, and unfortunately, he had passed away.
Yeah.
Not shocking. Older gentleman, health issues, etc. So they opened it up, and it wasn't until they actually got into the unit that they realized he was dead. And so they didn't know what to do, so they called the cops. Well, the cops then took my buddy down to the station and tried to arrest him on suspicion of murder.
No
I told you this, didn't I?
I totally forgot about it.
And he was like, guys, I just got back from vacation. Why the hell would I want to murder my tenant? Like, are you fucking kidding me? Like,
And then call the cops on myself.
He's so again, small town. So I think 15 cop cars showed up, and
big scene.
it was just I guess no one had anything better to do. But yeah, I mean, look, I guess the stories go on and on and on. I guess what I'm getting at is when you own rental properties, there's never a dull moment. You want and cherish the dull moment, because that's when things are going well. And anytime it's not a dull moment, you're dealing with some shit.
Yeah, I would agree with that. Yeah, it's not passive income, right? People got to realize that. For sure, real estate is not passive income.
So don't let TikTok fool you with the dancing and pointing at all the reasons that real estate's passive income. And Dan, you don't do any of the dances on TikTok.
No, I don't. I only point at charts now. I'm going to start those soon. I'm taking dancing lessons.
Yeah, good.
I'm not doing well on TikTok, so I got to get some dancing right.
In I guess one of your recent episodes, because I was listening to a couple of them, you talk about these kind of zombie companies and not your idea, but you would urge people to look at becoming their own landlord.
For sure.
Speak to that a little bit.
Yes, I think that one of the
what is a zombie company?
So I guess there's a couple of different interpretations of it, but in the U.S., a zombie company is basically like a company that wouldn't be able to survive without bailouts or corporate welfare, basically.
Okay.
But in Canada, it's more companies that are just existing for the sake of servicing all of their employees, paying the CEO, et cetera. It's basically just this tool that doesn't make any money. It's not growing. It's not a business that exists to create equity or grow or build a brand or anything. They just basically, it services all of its people, let's say.
Right.
And the other, real estate is similar to, it's like a lifestyle business, right? You run this business per se, and all it does is just pays for your lifestyle.
As a real estate agent.
Yeah. So a lot of these businesses could potentially be the type of business that you are building equity in if they had assets, right? But a lot of them don't. So one of the things I encourage people to do, like I've helped a lot of people in the landscaping space do this as an example, or in the construction, et cetera, is buy small commercial units, a commercial condo as an example, because you're going to pay a sunk cost anyways for rent. Most businesses need space, right? Yeah. So the idea would be, can they, or would they be willing to buy a commercial condo to run their business out of, so they can start amortizing that loan and building equity rather than just paying debt. So I would say it's a great wealth building tool for businesses, especially because it's probably the only place in Canadian real estate where you can get higher leverage than that 95% loan to value that you see a lot of end users getting in residential real estate, right? People buy high loan to value owner occupied homes. You can do the same thing through Desjardins, I think. BDC, Business Development Bank of Canada, have programs where you can get basically 100% loan to value if you're a business and you're purchasing real estate to exist within it. You see, large industrial businesses do this all the time, right? It makes the most sense for them. It's not for a business that's so big, it's not hard for them to run a building, right?
Right.
And they have to anyway. And if they were a tenant, they'd probably be triple net. Like they'd be
doing everything anyway.
Exactly. So you might as well own it. And that's my philosophy, honestly, at the end of the day, is you might as well own it.
Yeah. What where do you guys go to other than data? Who do you look to? Who are you listening to right now? What kind of books are you reading? Anything of interest right now? Doesn't even have to be real estate stuff.
I think I mentioned that the fourth turning.
Yeah, podcasts only.
Did I mention the fourth turning on the last episode?
No.
Yeah.
No,
that's a book that I read that has been extremely profound.
What's that about?
It's basically like talks about these generational cycles, almost like economic cycles. So how every 100 years there's like these cycles, turnings they call them. And it's based on...
Is this Ray Dalio?
No, but it's
Sounds
very
like him.
similar.
Okay.
Like you could map it side by side with Dalio's Changing World Order book.
Right.
But it's more social or like geopolitical. It talks about basically like how, one generation, let's say the boomers, are characteristically one way, and then they raise a generation like us to be a different way. And depending on the values of that generation determines sort of like the trajectory of the world socially, economically, politically, etc. It's an incredibly profound book. Like it's very pseudoscience, but it's very profound too. Like I would highly recommend you read it. It's probably the best book I've ever read.
Pseudoscience in what sense? Just that there's not a whole ton of data on it?
Yeah, there's really no way to
feeling?
substantiate everything that they're saying.
Right.
But then he, like, in chapter 6, he literally, the book's written in 94. In chapter 6, he starts listing things that might happen to signify the end of a fourth turning, because he predicts that the fourth turning would be happening around now.
Okay.
And he starts listing these things, and he, like, literally within, like, 10 to 20% is 9/11, Russian conflict right now, COVID, like like eerie. It'll like make your hair stand up when you're reading the pages of this book. It's about halfway through chapter 6 where he like lists all of these different things, and like half of them have come true, right? That one to me is like important because it analyzes what's on the other side of, when we see a lot of this economic crumbling, political crumbling. I think we're seeing some social crumbling, right? The fabric of society is like maybe I'm more aware of it, but like it feels like we're like more divided than we've ever been. There's like so much internal and external conflict between people in the economy, socially, et cetera, right now. And I think that on the other side of that is actually like sort of the growth trajectory of our generation moving into that leadership seat, right?
Right. Yeah, no, I don't disagree with that. And I think that that is the driving factor of, human behavior is your values. People go to war only over values, really. Yeah. Or ideas.
Yeah, and so you aggregate those across an entire generation, and which generation is financially in power, politically in power, socially in power, right? And what that means, right? So that's the big one. And then, I mean, mostly I just like interact with people on social media other than that, right? Like I'm always trying to figure out what's going on. Like I'm just curious about like everything, right? That's it. People think I'm smart. I'm not that smart. I'm knowledgeable because I love like hearing stuff and learning, right? So, yeah.
So you do a lot of you spend a lot of time on social media.
Yeah, I do. Too much probably. Like I mean,
engaging with
it's my
people.
business now. Like I run like pretty much a content business, I would say. Like I mean, between what we're starting, like it functionally I'll be making as much money from content as I do from real estate within the next 2 years. Yeah. So.
Wow. And is that mainly a factor of the new podcast?
Yeah, the podcast as well as some other opportunities. Like I think that there's like kind of like this niche, I don't even want to use the word like influencer, but like there is like this like finance community where brands and other, opportunities are looking for people to do. So like a lot of it's going to be like almost like amateur economics, right? Like, like I'm hoping to do some like good reports. Like, well, I'm doing a report for Zillow. Like I'll be doing quarterly reports for Zillow, which is the biggest real estate website in the country, for the next year. So I'm on a 1 year with Zillow for that. A couple of rental businesses as well that Nick and I are in negotiations with right now, basically putting together reports to bring value to Canadian consumers, but doing so through content, right?
Wow.
Yeah. So
yeah, it's fun.
Yeah,
that's
for sure.
good
It's a
stuff.
lot of fun, yeah.
For sure.
I hate to admit it, I probably haven't. I've picked up a few books, but I have not finished a book probably in the last year. It's been so crazy. And to be honest, I find myself reading so much in order to be able to speak about the things I do. I consume a ton of podcasts. It's funny that I found myself I guess I got to start introducing myself as a podcaster now, which feels weird, but it's super exciting. But I mean, I think one of the big game changers for me was Bigger Pockets out of the States, which is probably the best real estate podcast ever.
I haven't heard of it.
It's got like 675 episodes now.
Wow.
Yeah, they're huge.
They're huge. I mean, Dan actually coined us little pockets.
Yeah.
Yeah, I mean, honestly, they were a life changer for me. Like years and years ago, I started listening, and I've listened to some of them twice. You know what I mean? They're an hour long, so put a ton of time in on that. Other random real estate podcasts, but like my go-tos are The Economist, The Wall Street Journal. Just really try to keep up with anything financial economy that is going to affect real estate. And then when I'm not listening to that, I like to listen to Lewis Howes, who's great for like mindset and that kind of stuff, which I think is very, very important. And that's what the Bigger Pockets guys talk about a lot as well. Dan and I haven't really started to go that too far into that, the mentality it takes to be a real estate investor.
It's funny because you mentioned that to me, and you're like I'm like, I don't think about mindset, and he's like, yeah, it's because you just like have it, like you just like wake up with it, like, you know what I mean? Like,
no, you're a lot like my dad in that sense. He's just like, well, I just work.
But that is the mindset, right? Like she's like, no, I don't have one. And she's like, no, but that is your mindset, right? Like, and most people won't understand that. Like, what do you mean you just get up and work? Well, I get up and go to work too, but it's that's not.
I guess I just like I wake up and I just like love doing life, right? Like, I love like being a partner, being a dad. You know what I mean? Like, love doing business, love doing deals, podcasts, like whatever. I'm just like there for it. Yeah. But I didn't realize that was you had to like.
People have to work. And create
some people
that.
do. Yeah.
Well, I mean, we're both just overnight successes with the podcast, right? I mean, but that's the other thing too, right? It's like
3 years behind the scenes.
Yeah, and I mean, you know, 3 years of dedicated stuff. But I mean, I've been trying to start businesses for 10 years. I have been starting businesses for 10 years, right? You have too, right? So it's very vindicating and pretty awesome to see what, you know, a decade's worth of absolute grinding from, like, you know, at one point living in Vancouver, having a business where I went to go take a cab home because it was pissing rain in Vancouver, as it usually does. And I had like $18 in my bank account. I couldn't even take the $20 out to go take a cab home. And then even just not so recently, sleeping on, you know, with an air mattress on the floor of my rentals and working, you know, 15, 18 hours a day doing some of the work myself. So to now, you know, being in the hot seat with, you know, having the honor to be on your podcast, having a podcast that is, you know, our podcast that's done.
I mean, we launched in #1, which is like incredible.
Yeah, better than we ever expected.
Yeah,
I mean,
how does that happen? Are you guys still the #1, or are you guys launched as the #1 Canadian business podcast?
And 25 overall nationally. I mean, I don't want to, you know,
25 overall. That's 25
overall across everything. Yeah, so I think I haven't checked in a couple of days, but last time I checked, we might have been 5, 6, or 7. We're still top 10 business and still, I believe, top 100, 125 maybe nationally. So. I mean, look, that's the culmination of a ton of hard work, hours and hours of research going to each episode.
You've seen it, like,
dude.
It's I mean, really, you know how it goes, even with this, which is more casual, right? This is still a ton of work, right? So yeah, I mean, I guess I don't even know where I'm going with this, but just keep pushing, right? I mean, I get up every day now, and I love what I do. Not that I haven't beforehand, but it's like the grind is finally starting to pay off. Yeah. You know, 10 years of my buddies questioning, like, what the hell are you doing? Or 10, you know, like me leaving a job to go start a business where I'm making no money. Like, why the hell would you do that? Yeah. This is why, right? Because you know, 5 years from now, I'll be going to every F1 race in the same season. So.
Right on, man. That's a good place to end it. Yeah, you guys have any parting questions? Any parting comments for the fans?
No, I think we're good. That was good.
Next time we come, can I bring my dad?
Yeah, for sure. Absolutely.
Take your dad to work day. Yeah, he's a big car nut, so he'd love it here.
Oh yeah, bring him out anytime. Yeah. Cool.
Awesome,
boys.
Thanks for having us.
Peace.